Shares of Intuit moving to the upside this morning on the back of the company's stronger than expected results. Intuit raising its guidance for the full year, expecting revenue growth of 15%, the prior estimate of 12%. Joining us now with more, we've got the CFO of Intuit, Sandeep Aujla. Thank you so much for joining us on the quarter, Sandeep, and the stock hitting an all-time high as we speak here. You were able to lift guidance moving forward when so many other companies are pulling guidance entirely or at least lowering it here. Talk me through how you were able to do that.
Good morning, Madison. Thank you for having me. You know, it was an outstanding quarter. We saw our tax business get back to double-digit growth. The momentum in Credit Karma continues with over 30% revenue growth. Our small and mid-market platform continues to scale at a healthy 19%. So outstanding quarter, but really what's exciting, to your point about 15% growth, is the momentum that we have in the business. The company is truly firing on all cylinders. And it is that momentum that gave us the confidence to ratchet up the guidance as strongly as we did to 15% growth, which is the fastest organic revenue growth in the last decade. And while we're bringing new innovation to market across AI agents, while we're disrupting the assisted tax category and growing that revenue 47%, while we're building a go-to-market motion to go up-market in businesses, we ratcheted up our margin guidance by another point. So as a company growing 15%, delivering over 40% operating income margin. So really feel good about how we are set up, and I'll give it to continue to execute on our strategy, and once again, firing on all cylinders across this company.
And Sandeep, we've talked about policy coming from Washington before. The last quarter that I was able to speak with you, we talked about DOGE cuts, and you explained that you see that as a lift to your business. Obviously, the topic of the day in Washington right now is the so-called Big Beautiful Bill that includes extensions of tax cuts. How does legislation like that impact the company going forward?
Sure. Let me open up the aperture a bit on the question, just talk about the broader policy and the impact on our business. On the tax side, the extension of the tax filing, but more broadly, the interest of the government to eliminate waste, to have a better partnership with the private sector, will continue to be a tailwind to our company. As an example, the government is looking at better APIs across IRS so that we can provide a better tax filing experience for our customers, so that our customers could have a better insight into how their filing is progressing through the IRS system. And they're also looking to eliminate waste, such as the direct file program. So all that continued tailwind to our business. If you allow me, I'll add one more dimension to the macro environment. Today, a lot of questions around the tariff and how those are impacting businesses such as ours. We serve nearly 10 million mid and small businesses. And these businesses are across a range of industries and across a range of sizes. And 70% of these businesses are service-based businesses, so they are not directly impacted by the tariff. And what we continue to see in our data is stability. And that stability is definitely a good aspect for our business as we look forward. So we continue to watch the sentiment, but I see the macro to be a stable environment, and I expect the government and private partnership to be a tailwind for our business, as we talked about last quarter.
I think just on the small business point, and, I haven't had the privilege of speaking to you as often as Madison has, but looking at U.S. small business sentiment, it actually has continued to fall. So is your sweet spot the sectors and the businesses that are, as you just said, services? And so are the small business confidence numbers that are falling among small businesses that are actually products and goods and actual tangible, things that they're selling?
Good morning, Hope. Good to be speaking with you. For our business, I completely agree with you. While the sentiment is something that we are watching carefully, I look more closely at the data and what the data is showing us. And what the data is showing us is what I would describe as stability. And there are certain areas, such as manufacturing or wholesale, which is a small component of the business, where we did see slight pullback in April. The two factors that I look at most closely are the cash reserves that these businesses have across the board. And I'm seeing that be up about 5% year over year. And that's a very strong indicator in terms of the health of those businesses. The second indicator I look at, and this is more of a leading indicator from our perspective, being in this business for multiple decades, is the number of hours worked by employees of the small businesses. And those number of hours worked are flat year over year. So yes, the sentiment is something that we should continue to watch carefully, but what the data is showing us is continued stability across the small and mid-market businesses.
And just on this last note of soft data and sentiment, I was at a conference last week with CFOs across many, many sectors of the economy, and the general sentiment there was one of pessimism, especially because tariffs are introducing all sorts of uncertainties, as you know, and I hate using that word so much, but I'm curious, do you fall in that same camp? Do you feel, for the overall economic picture of the U.S., that there are more worries ahead than there are bright spots?
You know, we are a company that's been around for 40 years. We have our playbooks to operate through any macro environment, and what we focus on day in, day out is generating management alpha. So the way I would describe our sentiment internally is one of optimism about the upside we see executing on our strategy, regardless of the macroeconomic environment. So with us bringing AI agents to serve the small business and mid-market businesses, which is going to be a massive productivity and better decision-making capabilities for them that should help unlock even further growth for these businesses. For us, continue to disrupt the $35 billion assisted tax category. These are all areas that, for us, executing on a strategy and building upon the momentum that we have is an area of optimism. And I take a great deal of confidence in our playbook and the experience we have managing this business throughout any macroeconomic environment, that we will be well-suited regardless of what comes ahead. The last thing I would also say, and it's an important factor to keep in mind as it comes to Intuit, over 80% of our revenue is on a recurring or subscription-based businesses. And many of our products are very high in the hierarchy of need for these consumers, for the small businesses, for the mid-market businesses. So that also gives the company a healthy degree of resilience going through any potential economic cycle.
Sandeep, I want to end on labor costs for the company going forward. Obviously, you utilize AI tools from human experts, as the CEO mentioned on the call, but also more broadly as tools across the business. How are you thinking about labor as a cost-cutting measure going forward? Do you have any plans to lay off staff?
Let me address the last part. No plans to lay off staff, period. But let's talk about AI. We see two prongs to AI. One is delivering breakthrough experiences to our customers, the consumers on our platform, the small and mid-market businesses, nearly 100 million customers we serve. How do we bring AI to them, bring agentic AI agents to small businesses that do the work on behalf of these businesses, so our entrepreneurs can focus on growing their business as opposed to stitching together 3 to 10 apps to go run their business. So that's on the customer side, and that's resonating well. And in the coming weeks, we expect to have AI agents available to the nearly 10 million customers on our business platform. Now let's talk about efficiency, where your question was. We look at AI to rethink how Intuit works. I shared last quarter that we're seeing on run rate 90 million plus of cost savings on a customer service platform by using AI in how we schedule our agents, how we train our agents, how our agents use AI to address the customer's questions. But we're also seeing AI drive up to 40% productivity improvements for our developers. We are using AI in the finance function to take out repeat costs. So across the company, I see AI as a tailwind for us to continue to scale our business at a healthy rate while delivering improved margin expansion.
Sandeep, always appreciate you making the time for Yahoo Finance. Thank you so much for joining us.
Thank you, Madison. Thank you, Hope.
Thank you.